first meeting with Greg Abel running the show. Buffett was not slated to speak, but he made kind of a little bit of an appearance. It was much more of a company focused event, right? So when Buffett and Munger were there, it was folksy and kind of stories, and you're still learning things, but it was much less about the operations of Berkshire. Greg Abel went into dense detail on some of the businesses. I could tell right away. I almost felt like he was losing the room a little bit because people came in there, they were all excited and they want to see. They used to do movies in the beginning, and like you'd see Buffett with like Jamie Lee Curtis running around. So people I think might have been expecting some of that, and he's diving into what is a combined ratio in the insurance business, and you could almost feel a little bit of the air go out. But for someone like me, that was well, I know what that stuff is, but to hear him really talk about like. It was almost like a company conference call, which would have been great to have on a regular basis.
Yeah, but on a Saturday and in Omaha at what used to be like a festival kind of environment. You're the insurance analyst here at Bloomberg Intelligence, and Berkshire Hathaway is a collection of many companies. A big part of that is the insurance business. Just walk us through what Berkshire's vast insurance business is made up. I know there's Geico, I know there's some reinsurance companies, but how big a presence is it in Berkshire Hathaway overall? Yeah, no,
so it's about 30% of the earnings. It really drives, though, the float of the business is what Buffett talks about. So you've got primary insurance, you've got Geico, which is auto, and then you've got reinsurance, which they do globally. Geico's the biggest profit driver of that, and it's been up and down over the past couple of years. We might have talked about over the years in here how auto insurance prices went up and costs went up, and that stuff impacted them dramatically. Geico's looking to significantly grow now, so you're actually going to see them trade profitability for growth. But realistically, they're driving the float, they're driving the investments. So the way Buffett puts it is if we underwrite at a gain, we're essentially getting that money for free. And we do have to pay it out in claims, but we're getting kind of a negative cost capital to kind of run the rest of the business.
So just the mere fact of getting people together in an arena, which nobody else does, once a year, and that was all or primarily because of Buffett, the cult of Buffett. Are we going to be doing that going forward, do you think? How do you think that's going to play out?
Yeah, so I don't know, Paul. Abel said, see you next year, and I think he's going to be very cognizant to not break the mold of that Buffett has established, at least in the near term. So I think we see it definitely next year. The official word was that attendance or requests for tickets were down 10%, but it looked significantly more than that to me. In the building there, the upper bowl was kind of sparse. I remember maybe it was 2 years ago or last year, I made a mistake getting in there. Even though I was waiting online all morning, I made a mistake getting in, and I was literally, I could touch the ceiling of the arena and my back was against the wall. So there's been times where it's been at capacity, and this far less people. It's really the diehards, the Berkshire geeks and the insurance geeks.
Warren Buffett famously disliked paying dividends. He prefers buybacks. He thinks it's a better use of Berkshire's considerable cash holdings. But he loves companies that pay dividends. So there's a bit of a divide there. What do we know about how Greg Abel feels about dividends?
He feels similarly. So like I was saying, again, I don't think he's going to change anything much. He did an interview, and right after he became CEO, so he didn't. By the way, dividends didn't even come up at the meeting, but he did an interview where he had said, we reevaluate it every year and we'll see. In a situation where Buffett is no longer around, no longer chairman, honestly, I could see them doing a little something. I mean, it even opens up the investor base. I don't think they even care all that much about that, but generating so much capital. You mentioned buybacks. I was disappointed in the buybacks. They also mentioned in early March, that they started buying back shares. And so great, they probably bought back I was thinking about like several billion in shares, and they've done that in the past. It turned out to be like over 200 million-ish, which obviously is a lot of money, but not a lot of buyback for them. So I was disappointed to see that.
Considering that their cash is now just under $400 billion.
I know. And any 30 seconds left, any sense of change in policy there about putting that kind of cash?
Not really. I mean, so 380 billion-ish net of trades that they hadn't finished in the quarter. A lot of it was talking, Abel and Ajit Jain sat there, and they did the first session together. And the biggest theme of that was patience. And Ajit Jain was saying, people are coming at us with all kinds of opportunities.
Right.
And he said, once in a blue moon, we get the chance to deploy it.